Imagine your employer suddenly stops paying you today. If your salary or wages disappeared right this second, where would the money to fund your life actually come from? For most people, the answer is nowhere. Incoming cash flow would instantly drop to zero, and their savings would immediately begin to drain. We are taught that the path to security is ordinary earned income. We put in more hours, take on extra shifts, and negotiate for higher salaries. But tying your survivals strictly to your physical labor is a trap. Generating a high income means very little if you lack the financial structure to capture it. What matters is how much of that money you actually keep from escaping. It is easy to look at a large primary residence and a brand new luxury vehicle and assume you are seeing wealth. In reality, these items require heavy mortgages, constant maintenance, and high insurance premiums. Because most of us are never taught the mechanics of money, we look at the outward prestige of these possessions and confuse it with actual financial stability. Building real wealth requires a complete shift in perspective. Instead of staring at a static bank balance or calculating your net worth based on the perceived value of your belongings, you must track the active, directional movement of your money. Achieving financial freedom means abandoning traditional scorecards. You have to master the mechanics of cash flow. This diagram shows the simplest definition of a true asset. Whether you are actively working or fast asleep, an asset is a mechanism that actively deposits money into your pocket. A liability is the exact opposite. It is a mechanism that actively drains money out of your pocket. Look at the standard pipeline of the middle class. A paycheck enters the system, but it is immediately diverted to cover the mortgage, the car loan, and consumer debt. The money bypasses the central reservoir entirely. Examining a person's cash flow pipeline instantly reveals their true financial position. It shows whether they are building a permanent wealth reservoir or simply acting as a temporary conduit, passing money from their employer straight to the banks. The wealthy engineer their pipelines differently. They use a strategy of paying themselves first. Incoming money is forcefully diverted into the asset column before a single expense is paid. To fill this holding tank, you can acquire paper assets, like dividend-yielding stocks or bonds, which pay you for holding them. You can also construct this foundation using physical assets, like income-producing real estate or precious metals. Once these assets are accumulated, the final step activates. The assets begin to generate their own independent stream of income, creating a continuous, self-sustaining loop. Wealth generation does not come from your daily labor. It comes from these secondary, automated cash flows created entirely by your asset column. The biggest roadblock to building this column is psychological. When faced with a large purchase, most people reflexively say, "I can't afford it." That statement shuts down the brain and ends the conversation. The wealthy force a cognitive pivot. They replace that dead-end statement with an open-ended question. How can I afford this? Take the case of financial educators Robert and Kim Kiyosaki. Years ago, they wanted to buy a 60-foot sailboat. A boat is a massive traditional liability, requiring expensive maintenance and docking fees. Instead of denying themselves the luxury or draining their personal wealth to buy it, they placed the boat into a commercial charter company in Hawaii. When they weren't using the boat, it was rented out to tourists. The cash flow from the charter business perfectly covered the boat's upkeep and monthly loan payments. By altering their psychological approach to desire, they forced the creation of a new asset. They secured the luxury they wanted without suffering the penalty of lifelong labor to maintain it. Being rich is usually associated with possessing a massive, static pile of money in a bank account, but static money slowly loses its purchasing power. This equation shows the true target. Infinite wealth is the exact mathematical point where the cash flow generated strictly by your assets equals or exceeds your total monthly living expenses. Crossing this mathematical threshold means your survival is completely decoupled from your daily labor. Your assets fully fund your outflows. Your time is permanently returned to your own control. Your long-term financial destiny is strictly determined by where you place your daily focus. If you remain laser-focused solely on a salary, you guarantee a lifetime of funneling your physical energy into building your employer's asset column. Audit your personal pipeline today. Look at where your money is flowing and stop relying on a corporation to provide your financial salvation. There is only one critical question you should ask yourself from this point forward. What new assets am I building today? True financial independence is not a stroke of luck. It is the deliberate daily engineering of systems that pay you while you sleep.